Stock futures falling this morning as the stock rally loses momentum. Weakening data and warnings from the Fed weighing on investor sentiment. And our next guest says you don't want to buy the dip. Joining us now, we've got Alex Morris, FM Investments CEO and CIO. Alex, good to have you here in studio.
Good to be here.
So take us through why you don't want to buy the dip, especially given the run back that we've seen off of the lows of potentially the lows of the dip.
Low so far, right?
Yes.
And I think the reason why we don't like buying these moments are there's no certainty, right? Every time we hear of a new plan, it's another 90-day plan. And there's a whole patchwork of these going together, but eventually markets are going to call the administration to task and say, we need to know what's going on.
You don't think that's already happened?
Well, I think they made very clear what they felt about tariffs, and we saw some reprieve. But I haven't seen any policy come through. We haven't seen anything passed by Congress. All we've seen is a handful of, we'll kick the can down the road. We saw a plan from the UK that is not a model for anybody else. But I think what markets did like was they were heard. And the concern coming into April was Donald Trump wasn't going to listen to the stock market, he wasn't going to listen to the bond market, and he wasn't going to listen to his own cabinet. Well, we learned that he will, which was a good thing, but we've yet to really see anything permanent. And I think markets are going to want to see that before they start to take off. There's going to be some bounce right now, but I think we're going to see a lot more volatility ahead. It's nice while the president's getting airplanes and feted with camels that look like they're a scene out of Disney's Aladdin. It's another thing when that stops, and that will have to stop at some point.
So it sounds like you don't believe in a Trump put until you see final policy on the table, which I understand. But what should investors do with that framework then? Do they sell into this rally to get into cash? What is the play off of that?
We still like cash on the short end. We think you're still earning 4%. Those numbers are going to come up. We do think there's going to be some opportunities at the longer end of the curve soon when those, right now the 30-year is trading about 5, the 10-year about 4.5. We think those numbers probably another 50 basis points on the way up, and then we'll start to come back down as the Fed will have opportunities to cut later in the year. But right now, it's choose your asset allocation and stay put. Don't try to time this market, because as we saw in April, if you were getting a cup of coffee, you missed 10% of a market rally. And it's very hard to try to buy into these moments when they're going to take milliseconds to play out, not days or weeks.
What do you make of the health of corporate balance sheets right now, navigating through this as we've essentially made it through the bulk of earnings season here? And mind you, we have two CFOs sitting in the green room right now, so they're going to be listening closely to what you're saying.
Yeah, they'll give me my report card afterwards.
Exactly. So what are you making in the profiles of what we're hearing from companies this earnings season and how they're navigating this period?
I mean, certainly it seems that cash flows have been strong. The consumer is still present, but I think we're hearing that may stop. Whether it's supply shocks, which the American consumer is spoiled in the sense that in 2 clicks in 4 hours usually, I can have just about anything I want anywhere in the world show up to my door. That seems like that's going to come to an end somewhat. But we've heard it last earnings seasons a little bit. We're really hearing it now. Uncertainty. And that's the problem, is when you're uncertain, you can't make capital allocation decisions. You can't decide what to buy, what not to buy, what plans to make. And markets can accept that for a short while. They really don't like that for a long period of time, and they're going to start demanding some certainty.
And I wonder, too, how that is going to impact consumer sentiment and therefore consumer spending. I was just talking about that PPI data indicating some pressure on profit margins going forward here. We had Walmart talking about prices increasing as soon as this coming month, which was earlier than anticipated. How are you thinking about how that could impact earnings growth going forward?
Certainly, consumer sentiment in general is going to start to come through the polls, which is where politicians are really going to start to care. They're having trouble passing a tax bill, which is difficult all to itself. But in the long run, I think the consumer is happy as long as they don't have to pay for the tariffs. Right now, that isn't happening. Amazon famously didn't or did say they were going to put the cost of tariffs and then pulled that back instantaneously when the White House was upset. But eventually those will have to make it through to the end consumer. A 10% or 30% tariff is a national sales tax in large regard, and everyone will have to pay it.
Just lastly here, we only got about 30 seconds here. For those that are trying to think about their portfolio strategy and making sure that they're not fighting the Fed, even though the Fed is kind of just staying on its same course of action here, how should that be kind of playing out in their own strategy?
So we launched a product to help folks do that. We call RBIL, RBIL, because you can't fight inflation. Jerome Powell can fight inflation, Donald Trump can fight inflation, we can just participate in it. So now here's a way for investors to sit at the short end of the curve in the tips market without any duration and follow inflation up and down in a cash protected way. And then when they see the opportunity to flip into risk assets, you can get right out and ride the S&P 500, I hope, back to new highs.